Welcome to Inside India. I'm Amitabh Singh and these are your headlines. The bond markets front and center for investors as JGB yields continue to push higher. The long end climbing to a record high on growing expectations for a BOJ rate hike this month. Also doubts about an RBI rate cut pressuring Indian bonds, sending yields sliding and the rupee to fresh lows. But India's latest industrial output data saw its weakest growth in over a year, further complicating the RBI's decision. All right, let's get started with a look at the Asian markets. It's slightly muted. Apart from South Korea, what you're seeing is the top layer in green and only the Shanghai Composite in the red, really. What you're seeing also is that they've been muted because of what's happened in Wall Street. Wall Street effectively waiting cautiously for a decision around the Fed rate cut, and that is likely to be continuing to be in the zone of definite rate cut, because you have all kinds of predictions coming in that is going to suggest that it's about 85% above, and at the same time you have this global bond sell-off where you are looking at a potential rate hike in Japan. Comments coming in from the Bank of Japan's governor that hinted towards that. The only outlier here is perhaps the Kospi, where you're looking at 1.67% in the positive, because largely due to this development around shares of South Korean auto companies rising after the U.S. Secretary of Commerce Howard Lutnick confirmed that lower U.S. auto tariffs on 15% on South Korea would be retrospectively coming into effect starting November 1st. There you have it. Now, let's just focus a little bit on Japan, because JGBs are still front and center. The 30-year hitting record highs today. There's growing expectations the BOJ could hike rates as soon as this month, around the 19th, after BOJ Governor Ueda said they would consider the merits of a potential rate hike at its December 18th meeting and act appropriately. Now, that's pushed JGB yields to multi-decade highs. 10-year at its highest all the way since 2008, and the 2-year yield pushing past 1%. The sell-off in Japanese bonds also pressuring the European bond markets. The German bond yields hitting multi-month highs, with the long end of the yield curve there steepening. And a similar steepening happening with the Treasury yield curve. Remember, we have the Fed meeting next week where there are big expectations for a rate cut. About 85% are the expectations. Japan is the largest foreign buyer of Treasuries, and if Japan rates were to head higher, it would mean less incentive for Japanese investors to buy U.S. Treasuries. Now, the Indian bond yields are also rising, the 10-year hitting 2-month highs on growing doubt that the RBI will not cut rates when it meets this week following the strong GDP data. It's been a coin toss, really, for the last couple of days. The rupee sliding also to a fresh record low, currently sitting at 89.64, not beating that psychological barrier of 90. There's intervention coming from the RBI around that. Now, the latest industrial output data in India could further complicate matters for the Reserve Bank of India. Growth slowed sharply in October, rising just 0.4% year-on-year, well below economists' expectations of 3.1%. Now, government data show fewer working days during the festive season and cooler weather weighing on activity, with electricity and demand also weaker. Manufacturing grew 1.8%, but output in key categories slumped. Electricity generation down nearly 7%, mining down around 2%, durable goods like cars and phones slipped 0.5%, reversing strong growth a month earlier. For the April-October period, industrial growth averaged 2.7%, slower than last year's 4%. Meanwhile, India's current account deficit narrowed in the July-September quarter, helped by a smaller merchandise trade gap, the Reserve Bank of India said on Monday. Now, the deficit came in at 12.3 billion, or 1.3% of GDP, down from 20.8 billion, or 2.2% a year earlier. It was, however, wider than the 2.4 billion shortfall seen in the previous quarter. The merchandise trade deficit eased to around 87 billion, while services exports remained strong, driven by gains in computer and business services. Remittances also increased, reaching 38.2 billion. Economists expect the full-year current account gap to hover near 1.1% of GDP, with risks rising as the boost from front-loaded exports fades. All right, we're going to talk about all of that in just a minute. We'll take a closer look also at the Indian rupee. Don't go anywhere. Welcome back. Now, the Indian markets are coming online soon in about 37 minutes or so. Here's what GIFT Nifty futures are indicating at this point in time, slightly muted at 26,327. Remember, Nifty 50, it closed at about 26,175. This is after the benchmark index slipped for the second straight session, ending almost flat with a modest decline of 27 points. Now, the index did give up about 150 points from its recent all-time high of 26,322, and GIFT Nifty indicating that we're going to go back in that region, mainly due to profit booking by investors after the strong rally. That's what analysts are suggesting. Now, investors do look forward toward that Federal Reserve policy announcement next week. Before that, they're going to be concerned with the RBI's decision on the rupee, whether it does also have further intervention, and that's also got to do with its own decision around the rate cut. Now, we have just the right person to talk about this, Anindya Banerjee. He's the head of currency and commodities at Kotak Securities. Anindya, thanks so much for joining us. I appreciate that very much.
Thank you for having me.
Yeah, it's our pleasure. I don't know where to start. There's global volatility, there's uncertainty in Japan, there's hopes of a Fed rate cut above 85%, a GDP Q2 figure at 8.2%, but inflation at 0.3%. So what does the RBI really do on December 5th?
See, RBI has their job cut out, because as long as the inflation is low, there is room to support growth. Because if we look at the nominal GDP of India, which takes real GDP into account, which is 8%, and the inflation, the nominal GDP is at multi-year low, which means there is room for RBI to cut rates. And we anticipate a 25 basis point cut on in the December meeting. And RBI would likely keep the overall liquidity quite comfortable, so that the growth is able to push higher. So yeah, so that's the overall view of
I guess the question is, when you have Q2 GDP data coming and suggesting that we're at real growth of 8.2%, then why do you need to cut?
Because, as I said, when you look at your tax collections, when you look at corporate profits, everything is linked to your nominal GDP, right? And that's currently around 9. The real is around 8. That's something which has not happened in a long time, that the spread between the two is low. So because, and plus the global environment is challenging. And if you look at just the PMI numbers which came out yesterday, it clearly indicated a slowdown in export orders. Job creation has slowed down. So though the real GDP numbers are still signaling a fantastic growth, but because the inflation is low, there is no harm in trying to push the growth higher without having to worry about the economy is going to overheat.
All right. And now there's the other question, perhaps a worry for the RBI. How does the RBI balance the desire to lower rates with the need to avoid stoking imported inflation through a weaker rupee?
Right. Yes, the Indian rupee has been one of the weakest currencies in Asia this year, at a 4.5% depreciation against the dollar. The 4.5% depreciation is not significant enough to create a large dose of imported inflation, especially when your oil prices are benign. If these oil prices were to move from currently $60 to $80, yes, that would have caused a real worry. But I think the current situation is kind of a Goldilocks kind of a situation where your weak rupee is not hurting you on the inflation front. Yes, that will worry RBI, especially if it crosses the 90 mark. So that's why we expect them to intervene quite aggressively, closer to 90. I presume they did yesterday. But at this point, the rupee is still not at a level where it should lead to a huge dose of inflation import.
Okay, why is the rupee weakening and testing record levels at this point in time, today or yesterday? Is it a battle between those maturing non-deliverable forward positions and the RBI's intervention, dollar selling intervention by the central bank, helping the currency hold that psychologically important 90 level that you mentioned?
Absolutely. It is the NDF positions which are maturing, putting an upward pressure, especially over the last couple of days. At the same time, if you look at the flow environment, FPI flows, it's still negative for the year, including the good inflows in the debt, but the equity outflows continue. FDI has picked up a bit, but it's not significant. We are seeing NRI remittances, the non-resident remittances, they are coming down. So overall, the flows have come down. The imports are strong because the economy is doing well. And that's putting a pressure on the Indian rupee. And yes, the 90 mark is not significant from a macroeconomic perspective, but it's very important from a psychological perspective.
Yeah.
So if that breaks, we could see much higher levels.
That's exactly what I wanted to ask you. The sense is that it's inevitable. The rupee will cross the 90 level. It's a matter of time, right? Now, how much of an impact could that have on the market and the general population? Because it's always been a matter of perception.
Right. So let's come to the market first. What happens is when you cross a psychological threshold like a 80 or a 90, how does that become important from a market perspective is there are a lot of option sellers, be it exotics or be it vanilla options. They have strikes with 90 and above. Those get triggered and that can accentuate your rise because they come into the market and start buying dollars. So that's a more technical impact which happens on the prices. Yeah, it creates a lot of headlines as far as the local media is concerned because the rupee crosses from 80 to 90. But as far as the macroeconomic impact goes, as I said, it is not the level, it is ultimately the extent of depreciation or appreciation which has an impact. So it will just add a few basis points to that 4.5%. Other than that,
right.
It's not. Technically, create.
Okay, let's not forget, Parliament is in session. Optics are very important at this point in time with a number of reforms that Prime Minister Modi's government is trying to pass through. There's this other thing about optics related to the tariffs. The hopes of the reversal of the 25% penalty have been pushed from by Thanksgiving, that's what was there in the reports, to by end of year. The trade deal will take time is what India's lead negotiator, Commerce Secretary Rajesh Agrawal has indicated. Does this mean we are set to witness the rupee's further slide?
Yeah, because if you see, whenever there has been a direct trade war between America and some other country, like it was between China and America around April, we saw the yuan depreciated. So during a trade war, currency becomes a weapon because it gives you some support to your exporters. So I think that's why the RBI has been intervening, but not aggressively as we have seen in the past few years. So yes, till the trade deal is signed, I think the pressure will be on.
All right. How much will the Fed rate cut that is predicted now, 85% and above is the prediction around it? How much will that affect how the rupee is impacted and the RBI's decision? Because it is going to come a couple of days after the RBI's decision, but certainly they're going to factor that in.
Yes, absolutely. See, 25 basis point by the RBI, 25 basis point by the Fed is more or less factored in because it's well expected. But what's going to be the important, I would say the joker in the pact is going to be the commentary of the Fed. If they sound dovish, that is a new piece of information and that can help the rupee appreciate, but not much because around 89 levels, 88, 80 levels, we expect the importers to come in. RBI may also step in because they have short positions on the forwards to cover. So it needs some kind of a major positive trigger, and that positive trigger could be the trade deal. But till then, it will be well supported around the 89 mark.
Yeah, the Fed governor was speaking a short while back, but he started his keynote speech by saying, I will not be talking about economics or giving any indication. All right, there's this other question that is of big interest to Indians particularly. Gold prices rising to a 6-week high on Monday, while silver also struck a record high ahead of that key US economic data. Are we due for a correction in gold prices and silver? How are Indian households likely to alter their purchasing plans based on your outlook?
See, we are seeing a lot of interest in this silver because Indians have been a big buyer, the retail households of gold over long time. Silver, that way, we have a huge allocation, but not as much as gold. But over the last, I would say, 1 year or so, considering the considerable rise in silver and the whole play that it's a dual metal, money plus it's an industrial metal. So we are seeing a lot of interest through the ETF route in the silver market as well as from the physical market. Yeah, corrections will continue to happen. Like gold, we think is in a kind of a time correction after that peak in October. But the overall prospect is quite bright. And in the next year, we expect it to head towards the 5,000 mark on dollar per ounce. On silver, we are more constructive because, as I said, it's a dual play. And the industrial side of it is creating a market which is in deficit for the last few years, and we could see silver prices head much higher, possibly towards the level of 70 next year.
Oh, wow, 70. We're at 57 at this point. Okay, what's the outlook for crude oil prices? How is that likely to affect India's current account deficit in the coming months, presuming, of course, that the trade deal is delayed?
Right. See, crude sits pretty because currently, the factors are such that, yes, there is an overall drift down because the market remains well supplied. And considering the fact that OPEC had just come out with their latest update where OPEC even said they are expecting a small surplus to a balanced market. And the dynamics of the market is such that the 2026 demand growth is not strong enough, and which means the supply from non-OPEC is enough to compensate or meet that entire demand growth, which is not good for OPEC. So overall, the market, we could see a slow drift down. Yes, the geopolitics of Iran, Israel, or let's say Ukraine, Russia, or Venezuela, America would always have some short-term impact on the upside. But the overall trajectory is down. That's why India is quite well placed, being a large crude importer. So it should not have a big problem on inflation or current account.
Okay, reports also saying right now that India's state-run refiners, Indian Oil Corp and Bharat Petroleum, have bought Russian crude for January delivery, lured by discounts and plentiful supplies from non-sanctioned sellers. This is what one report has said. I don't know if you have a comment on that. Do you?
No, I wouldn't comment on that.
All right, okay. So I guess I want to ask you a little bit about what's happening in Japan, because there seems to be a bit of a rejigging of portfolios by global investors. When you have these multi-year highs, the 2-year hitting its highest since, 2008, and you have Governor Ueda's language shifting from what is known as cautious observation to active preparation, saying the BOJ will act as appropriate and almost as a fresh nuance on what he usually says, openly discussing the feasibility and timing of a hike. How does this impact, the global portfolio of a foreign investor, global investor, and where does India come into this picture?
Right. So the yen carry is now a big point of discussion in the markets, because kind of the Bank of Japan is boxed. On one hand, they have been very slow about hiking rates in spite of the fact that inflation has become a problem in Japan. And now the issue is with their bond yields at 25-year highs, and the government now talking about more issuance of debt because of an expansionary fiscal policy. What does the BOJ do? Because if they do their traditional QE or yield curve control, the problem is the currency goes for a toss, which further feeds into inflation, which actually defeats the purpose of trying to control the yields. Now, there's another way out, which will hurt some other country, which is they are the largest holders of US Treasury. Now, if Bank of Japan were to sell the US treasuries like what the Chinese have done, and then with that money they would have bought their own bonds, then that would have not led to a QE or balance sheet expansion, and that would have actually helped their cause. But that would have triggered an unwinding of the yen carry trade in a big way and led to the rise in the yields in the US. So the choices are not so great for Japan, and that's one factor which we'll have to watch next year. What do they do? Do they sacrifice their currency to save their bonds, or do they basically sacrifice the US Treasury to save their bonds? That will be something to watch.
All right. Anindya Banerjee from Kotak Securities, thanks for that deeply nuanced perspective. Appreciate you coming on. All right. In the meantime, Genting Malaysia has been named as one of the 3 finalists in the race for a full commercial casino license in New York. CNBC's Southeast Asia reporter JP Ong has more. JP?
Yeah, good morning. And these 3 finalists all actually got regulatory approval now from New York regulators actually to possibly develop 3 casinos in the New York City area. Now, they'll have to submit these bids now for approval in front of the New York State Gaming Commission. But if they get these sometime by New Year's Eve, it might see 3 casinos you mentioned within the New York City area, 2 in the borough of Queens and 1 in the Bronx. The one that Genting Malaysia is operating will be a redevelopment of the current racetrack that they actually operate near JFK Airport in Jamaica, Queens, which will see them redevelop this and put in about $5.5 billion US to expand the operations and develop up to 500,000 square feet in gaming floor operations, and also add up to 2,000 hotel rooms and various entertainment spaces to form what's seen as an integrated gaming entertainment complex. Now, again, as we mentioned, this is also something that they'll have to get they'll wait for approval on, but definitely big developments for the likes of Genting Malaysia. They did ask for a trading halt earlier on today from the Bursa Malaysia to give investors time to digest these developments actually. And so far we're seeing that the shares are moving in a bit of a quizzical fashion, because we're seeing Genting Malaysia shares currently trading about 3.4% in the red at 2 ringgit and 27 cents per share. But definitely a lot of interest right now, because again, this could also lead to new revenues for Genting Malaysia if they're able to develop these casino operations. And they're expecting that some of the gaming tables and slot machines, if they get the approval, might even be online, and they can offer these to customers as early as July of next year. But again, fingers crossed, because they'll still have to get the New York State Gaming Commission to approve of their license and offer them a full license to develop one of the first 3 casinos in the New York area. Amitaj.
That'll be interesting to see one of those. Now, apart from this big development, plans by Genting Malaysia's biggest shareholder to take the company private, they seem to have fallen through. Tell us about that.
Yeah, and I think this also has something to do also with the prospect of will they or won't they be able to get that gaming license out in New York State. Now, we have to remember that Genting Berhad, which is practically the parent company of Genting Malaysia, raised their stake in Genting Malaysia to about 73.1%. But this is below the 75% threshold that they set, actually, which means they've had to give up their bid to take the entire company under full control and take them private. Keep in mind that they actually listed or actually made the offer to take Genting Malaysia private at about 2 ringgit and 35 cents per share, which some believe might actually be undervaluing the company, especially if they're able to get that gaming license to operate that casino in New York City. If they're able to get that, then the earnings profile for Genting Malaysia will be raised actually, and thus might also merit a higher valuation. At least that's according to some analysts, such as those out in Maybank, who do believe that the fair value actually for Genting Malaysia is at 3 ringgit and 27 cents. But as you mentioned a while ago, very interesting to see that Genting Malaysia today in the red considerably actually out on the Bursa Malaysia, while Genting Berhad, which had to give up that takeover bid, is trading, well, now also in the red. It seems that they're swinging between gains and losses now, also about 1 cent per share lower at 3 ringgit and 35 cents. So a bit odd to see these movements in the markets, but definitely very interesting developments and making for an exciting end to the year for the group of Genting.
JP Ong there. Thanks so much for that. Quick update now on the Hong Kong fire. The authorities there have arrested as many as 13 people for suspected manslaughter after the city's deadliest fire in decades. The blaze at the Wong Fuk Court housing estate in the Tai Po district has now claimed at least 151 lives, with more than 40 still missing. Thousands have turned out to mourn the victims as searches continue through the burnout towers. Hong Kong Chief Executive John Lee is saying he will set up an independent inquiry to investigate the tragedy, and that Legislative Council elections scheduled for this Sunday would proceed as planned.
We need a reform. Yes, we have identified failures in different stages. That is exactly why we must act seriously to ensure that all these loopholes are plugged, so that those who are responsible will be accountable.
Now, the number of dead from Cyclone Ditwa has risen to 355 after the worst floods in a decade unleashed deadly landslides across central Sri Lanka. Another 366 people are still missing as rescue teams battle blocked roads and difficult terrain. President Ranil Wickremesinghe has called it the largest and most challenging natural disaster the country has ever faced. Coming up, risk-off sentiment hitting cryptos and other speculative assets hard. Where's the crypto market headed from here? We'll ask Ursula McCormack of King & Wood Nielsen's. Welcome back. We're counting down to the market open in India. We're looking at about 15 minutes. That's when the market opens. At this point in time, GIFT Nifty futures indicating, well, it's going to be muted, but we're still going to be around that record high that we've been seeing the past couple of days. In fact, yesterday we did see it, but Nifty 50 finally closed at 26,175. The relationship between the US dollar and Indian rupee, that's a big area of concern. At this point in time, there are reports and have been for, well, several days now that the RBI is intervening, making sure that the rupee doesn't hit that psychological barrier of 90. But then there is uncertainty around the trade deal. There is also action in Japan. And obviously, one has to think about how the Fed will act. Will it actually go ahead and cut its rate as is expected? And then the RBI's decision on Friday, most likely economists suggesting that there will be a rate cut because inflation is so low. Now, the winter session of the Indian Parliament is in full swing. CNBC TV 18's Shivani Bajaj joins us now from New Delhi. Shivani, how have you been? And tell us, what are the highlights of day one? Because the Modi government is now seeking the Parliament's approval on what, like $4.62 billion also?
Well, Amitoj, good morning. And the first day of Parliament, as you said, the winter session opened with a bit of chaos on discussions about the SIR, but has also opened the session with a significant supplementary demand request. On day one, it sought Parliament's approval for a net additional outlay of 41,455 crore, as you mentioned, with gross extra spending for the year pegged at 1.32 lakh crore rupees. That's the kind of outlay we are seeing at this moment. 4,103 crore rupees for defense, 12,500 crore rupees to compensate straight-run oil marketing companies, recovering of cooking gas, 11,000 crore rupees in extra fertilizer subsidy, and of course, an additional outlay for other things. As I said, the first day saw a lot of chaos, and this comes on top of the government's budgeted expenditure of 50.65 lakh crore rupees for the fiscal year ending March 31st. All these supplementary allocations will now go through scrutiny by the relevant parliamentary committees before being put to vote in both the houses. But let's see if they're passed.
All right. All of those disruptions in Parliament related to the special intensive revision of electoral rolls, and you mentioned a number of figures in rupees. Just for our viewers, I can say that it's a net 414.55 billion rupees, which is about $4.5 billion US dollars. Okay. There are a couple of other bills, key bills, that Prime Minister Modi is trying to get through in Parliament, but there are these disruptions happening. He'll have to probably prioritize. But can you give us some color on which are these key bills and what's expected?
See, Amitoj, there are a lot of bills slotted for this winter session. There are a total of 14 key bills, important bills, all of them important, but there are all eyes on a few of them, like the IBC amendment, the Atomic Energy Bill. One of the key bills in this season, in this session that all eyes are on is the Atomic Energy Bill 2025. This legislation could reshape India's energy landscape. For the first time, the nuclear power sector might be open to the private players and state-level participation, not just the existing public operators. This bill aims to dismantle the monopoly on nuclear power generation by decentralizing operations, establishing a proper regulatory and tariff setting mechanism, and clarifying liability for plant operations and equipment suppliers. Alongside that, as I said, there are a lot of key bills that are slated. The Insurance Amendment Bill intended to update regulatory norms and possibly allow more foreign capital into the insurance sector in India. A Capital Markets Bill aimed to strengthen market framework and revisions to the insolvency framework under the Insolvency and Bankruptcy Code IBC amendment, likely to tweak rules that govern corporate restructuring and credit rights and resolution timelines. Let's see how many of these are passed in winter session, but clearly a power-packed winter session for the Parliament in India.
Yeah, this is going to be fascinating. We don't have much activity usually around this time because we're heading towards the end of the year. But there's a lot that even Prime Minister Modi said to the opposition yesterday as the session began. He stood outside Parliament, made some political comments, but we're going to have to see whether things actually get through and get done. Thanks so much for that, Shivani Bajaj. All right, let's just take a quick check on the Indian bond yields. We are looking at this because of the action that we've seen in Japan, but we're also looking at this because the 10-year hitting a 2-month high on growing doubt that the RBI will not cut rates when it meets this week following the strong GDP data. But at the moment, we're looking at it opening a little bit higher. We're going to keep track of this and more in just a bit. Now, the risk of sentiment also hitting cryptos, and cryptos becoming a larger part of the conversation around the volatility in the global markets and other speculative assets too. Bitcoin fell as much as 6% at this point in time, down 5.53%. This was on Monday, its steepest slump in months, almost since March. Now, right now, we are looking at Ether and BNB also down above, well, close to 8%, both of them. Ripple also down minus 8.60. Last month, it slipped below 90,000 for the first time since April and has struggled to recover since the ongoing slide in crypto is tracking a broader risk-off tone across markets fueled by growing concerns about a potential AI bubble. Okay. So the crypto market turbulence hitting Strategy, formerly known as MicroStrategy, the largest corporate holder of Bitcoin. The company slashed its 2025 earnings forecast, citing Bitcoin's continued slide, and is moving to bolster its dividend support. Strategy now expects full-year results to range from $6.3 billion profit to a $5.5 billion loss, compared with a previous forecast of $25 billion in net profit, a projection that assumed Bitcoin would be at 150,000 by year-end. The company also set up a $1.4 billion US dollar reserve to fund dividends and interest payments using proceeds from its share sale program. Strategy plans to grow this reserve to cover up to 2 years of dividend obligations as it navigates ongoing market volatility. And joining us to discuss all the turmoil in the crypto world is Ursula McCormack. She's a partner cross-border finance and technology at King & Wood Maleson. She's joining us from Sydney. It's good to know that you're down under, as crypto is also down. But while I crack bad jokes, can you give us a sense of what really is going on? Because market action, just for our viewers, has gone from, 125K to about 86K, dancing, of course, in the last 7 days between 92 and 84 Bitcoin we're talking about. But what's the primary cause for this current slide?
Great to talk to you today. Well, look, you're quite right. We've seen a significant decline in market prices, not only for Bitcoin, but for the broader digital asset class. And, you know, that 30% slide is quite a shock to financial sector participants that are used to more modest volatility. But really, you know, there's a lot of speculation about why that is. Is it the yen carry trade because of interest rate action in Japan? Is it because of a lower level of enthusiasm generally for the asset class? Is the infrastructure not quite ready? You name it, there are reasons that are cited for that decline. But in my personal view, in being in the sector for the last 10 years or more, is that this is fundamentally a volatile asset class. And we have been here before. One of the defining features of Bitcoin itself is that it is very much premised on the forces of supply and demand and the faith in the technology itself, and not necessarily some underlying thing. So it is quite a unique asset, and other assets are different. We've got fundamentals that are different in different assets. But that confidence game in Bitcoin, the speculation on what others are doing, has long played a significant role in the comings and goings of this market.
Right.
And I would encourage anyone to look at the chart, and we're always in this mountain range of peaks and trough. And the real question really is whether we've reached the summit for Bitcoin as it is forevermore, or whether or not that summit is still behind the clouds.
Okay. I'll let you answer that question yourself, but I also want to ask, in the past several months, particularly since Donald Trump became the president for the second time, there was this furor, there was this frenzy, there was this excitement around this conversation around Bitcoin being more legitimized, institutional adoption coming in, and therefore the volatility of Bitcoin that you refer to, which is fundamental to it, changing. Hasn't that changed?
Absolutely. So that policy shift in the United States had ripple effects all around the world. As I mentioned, it's a confidence game when it comes to the digital asset class. We've had an uneasy relationship between regulation and digital assets for as long as I've been in legal practice. And really what we saw was the legitimization of the digital asset space through regulatory clarity, through the articulation of expectations really around the world. You had a change in focus in the United States towards focusing on areas of harm. And you also had businesses around the world achieving licenses, providing more secure pathways for investors to gain access to the asset class with far more granular requirements for their exchanges, for their brokerages. So that risk profile from an investor participation perspective has fundamentally improved. But really, critically, we still naturally have that underlying volatility that remains very important to take into account. But we can talk about some of the trends in regulation, but certainly that uptick in regulation and its specificity has really boosted confidence in the wider participation in the sector.
Right. I want to talk to you about perhaps the biggest bull when it comes to Bitcoin, one of the biggest bulls. Obviously, it's governments that are the biggest bulls. But Michael Saylor, right? We talked about MSTR a short while back. And there are a couple of things. The Bitcoin treasury play has gone down, 12.5% to its lowest level since, October 2024, revealing a new 1.44 billion cash reserve that we were talking about. Now, the most, I would say, controversial comments have come in from the person who doesn't have any coins. He's a gold bug, Peter Schiff. And he's made these comments, and I want to get your comment on this because I want to quote him. So Strategy's new business model is to sell stock to raise cash, then use that cash to buy treasuries that yield above 4% to fund the issuance of debt and preferred stock at a cost of 8% to 10%. How much longer will investors pretend this is a viable business just to gamble on Bitcoin? The business model is a fraud, and Michael Saylor is the biggest con man on Wall Street. This is what Peter Schiff said. What's your take?
Well, look, I think that there has been a sense over the last 12 months that, we see even amongst, really sophisticated institutions that for Bitcoin, the only rule is that number goes up. And, really it's important to treat this as the highly volatile asset class that it is, and therefore with immense, risk and potential return as well. But, one of the things that, we commonly, say here is that the more things change, the more they stay the same. So really when we're talking about those broader strategies around a volatile asset class, whether it's Bitcoin or whether it's, some critical mineral, we're still thinking about the same considerations in entering into that market or participating in that market and really understanding its own fundamentals when engaging in the sector. What I would say, I won't comment on any specific strategies, but certainly we saw a gold rush of sorts in relation to market participants looking to add to their treasury, but again, with that assumption that only number goes up.
Right. Broadly speaking, it is perplexing to me, as I've covered the space for a couple of years, that BTC and ETH haven't seen this level of adoption previously and attention. But no one is bullish at this point in time. That doesn't make sense.
Yeah, well, look, it also depends on who you talk to. So, you also see some of these companies that have suffered losses still in acquisition mode and maybe in diversification mode. So maybe their strategies are changing from Bitcoin to some of the other assets that perhaps have a different environment, have a different technical architecture, have different market participants. And so I think that as we see certain activity in relation to Bitcoin, you will see at the same time a growing awareness of what else is out there. And when we talk about, you mentioned gold a moment ago, the growth of gold-linked digital assets that leverage blockchain technology to deliver market access to gold. That's a really important broader story as well as to the impact of this asset class on financial markets more generally.
Right. You know, we've talked about institutional adoption a lot in the last couple of months, that it's improved and therefore legitimization of the space has happened. But then you have, in the last, couple of days, you've had two incidents. Yearn, the protocol lost 9 million in an exploit with 1,000 ETH transferred to Tornado Cash, the mixer. And days after, leading Korean exchange Upbit suffered a multi-million-dollar hack. So you have institutional adoption, but the guardrails are not getting stronger. Is that correct?
Well, that's an interesting one, because if we look at then the regulatory environment, we had a real push towards globally, a real push to getting AML rules in place for the sector. Very important to meet Financial Action Task Force recommendations, to avoid being grey listed at its market. That's all moved forward. And really the current story in regulation is the conduct requirements. It's cybersecurity, it is custody, it is the selling practices, it is the exchange technology infrastructure. And what we're really noticing about that area of regulation is that it draws a lot from traditional financial market regulation. But there's a critical difference, and that difference is that the focus on the quality of the technology is far more granular than we've ever seen before. So whether you're in a sophisticated market like Hong Kong or Singapore or in the UAE, you will see a very significant interest by the regulator and very, very prescriptive rules about what that security architecture needs to look like. Now, the difference, though, in terms of some of those outliers and those events that we're still seeing is that it's one thing to regulate a centralized platform, but it's another to regulate technology that is available more broadly in a decentralized manner. And so I think the focus remains on the exchanges, the brokers, the custodians, and really tackling that broader security question more indirectly through the regulatory controls that are imposed on those critical market participants.
Okay, this is going to be slightly, detailed in a question, because we've just had a couple of things happen, right? We're looking for a markup on the Senate Agriculture and Banking Committee in the US for market structure legislation, which is, awaited. There's a Senate floor for CFTC Chair nominee Mike Selig, but none of these have been scheduled. But I want to talk about stable coins, all right? Because you have a clash between banks and crypto firms over the future of digital asset regulation. You have the Federal Reserve's top bank, COP, planning to tell the House lawmakers today that she will work to establish, not re-establish, new rules for banks and stablecoins. At the same time, just a couple of, I think yesterday, the People's Bank of China warned that stablecoins, tokens pegged to fiat currencies, lack proper customer identification and anti-money laundering protections, enabling money laundering, illicit cross-border financing. So difference between the US and China and India's RBI, the central bank has made it very clear that it's completely against stablecoins. Stablecoins in the global context, how are we supposed to read it?
Yeah, well, stablecoins have played and will continue to play a very significant role in the financial markets. And critically, they are a representation of regular currency, but in a digital environment. And so when I have a digital gold token that I want to trade against currency, there are very persuasive reasons why I might want a digital form of cash to be able to transact against that digital gold token or that digital bond. So very powerful value proposition. The second value proposition, another really crucial one, is cross-border payments and payments back-end infrastructure, or the movement of value from A to B. So stablecoins will continue, in my view, to play a significant role. And so therefore the question is, how does it fit in to the infrastructure, to the broader economic and monetary policy of a particular jurisdiction? And that question is different for every market. For the US, for example, that has an interest in the US dollar playing a significant role in international transactions, there is value in having a strong policy and regulatory framework for trusted US dollar stablecoins, private money that can operate in digital context. The value proposition might well be different for another market that might have a central bank digital currency or that has currency controls. There is a tension point between stablecoins and bank deposits, and that's largely to do with the fact that most regulations require stablecoins to be backed one-to-one, whereas bank deposits obviously can then be on lent. So we see in markets like the UK proposals to limit stablecoin holdings. But overall, the momentum going forward that we see around the region in Asia Pacific, that we see globally, is to provide a regulatory framework that structures what the asset needs to look like and also its life cycle. So the AML controls, the potential interventions if it falls into the wrong hands, as well as who can offer and sell it into the market.
Fascinating, Ursula McCormack. That was very detailed and absolutely, fascinating. Simply because you've had these, disruptions when it comes to stablecoin regulations. The U.S. doing one thing, the rest of the world, particularly on this side of the world, India and China, confused about it, perhaps not wanting to come in with regulation, making it absolutely clear. But then you have conversations around it, and you have some private, stablecoin that's backed by the rupee coming in. So there's a lot to cover. We'll cover it next time. Thanks so much for that. Appreciate it. All right, Indian markets have joined the trading day. We'll track the rupee levels and the latest auto sales figures after a short break. What's going on with that? We'll come back. Welcome back. This is Inside India. We're looking at this point in time at the Indian markets, which have been online now for a couple of minutes. The Nifty 50 down 0.13%. Muted start was expected. GIFT Nifty indicated that. But the big headline really is about the US dollar and the Indian rupee. The rupee weakening to a record low. Remember, it was around 89.4 about 2 weeks ago. That was its previous record low. And this has been expected, keeping in mind the RBI has been trying to stall this slide of the Indian rupee, making sure that it doesn't hit that psychological barrier of 90. At this point in time, it's hit 89.8. a fresh low right now at 89.7980. So really, it's a battle with everything that's going on around the world, with the focus really on Japan and how it might actually be hinting towards a rate hike. Now, India's goods and services tax collections, they came in at 1.7 trillion rupees in November, up 0.7% from a year ago. But overall government revenue, it fell 4.2% after including cess. The cess was previously reported as part of gross collections. The data, which reflects October sales, was closely watched after the Modi government cut GST rates on hundreds of consumer goods to boost demand. But analysts say higher purchase volumes haven't fully offset the revenue hit. November marks the first full month showing the impact of the tax cuts on items like shampoo and small cars. But those tax cuts kept car sales buoyant in November. India's top car makers posted strong November sales as the tax cuts helped lower vehicle prices and boosted demand. Maruti Suzuki led the pack with a 21% jump in domestic sales driven by SUVs and small cars like the Alto. Mahindra & Mahindra and Tata Motors, they each saw sales rise 22%, while Hyundai grew 4.3%. Together, these four companies make up more than 80% of India's car market. The stocks right now all up apart from Hyundai. Now, SoftBank-backed Meesho is ramping up investments in AI and new business lines as it aims to expand its user base and move toward profitability. CEO Vidit Atre told Reuters the company seeking a valuation of up to 5.6 billion in its upcoming IPO. That's what he said. Now, they will open a 3-day share sale tomorrow with a market debut set for December 10th, competing with Amazon, Flipkart. Meesho will invest in chat and voice-based AI agents to help first-time online shoppers, particularly in smaller towns. It will also boost spending on technology and marketing and scale up Valmo, its logistics aggregator, to cut delivery costs. All right, now that's all the time we have today on Inside India. Keep watching CNBC because you can access Middle East right up next.